Do you hate the thought of working past 55 or 60? Do you hate not being able to live the life you deserve today? Do you hate not knowing what your financial future looks like? It's time to stop doing what you hate. Here's your host, Mr. Harold Green.
Hello, everybody. This is Harold Green of Bright Tree Financial Group. And it is time to stop doing what you hate. Hopefully you folks are having a fantastic day and everything has been going well with you all. I've been a little bit under the weather here, but hanging in there, working hard, trying to get things done, trying to close out the year strong and making sure we're making the right moves and putting ourselves in position to be as successful as we can. Today's show is going to be October's stock market update. Going to give you guys a snapshot on what happened and where I think things are going to go from here. But first, I want to start off by talking a little bit about my trip to Japan. That's right. I went back to Japan for a little bit to celebrate my mother-in-law's 80th birthday. It was great getting together with family and checking everybody out and just having a great time and things like that. And it was a lot of fun. We stayed in, I think it was 6 different hotels in a matter of a couple of weeks. We were just like all over and it was good. We went to some places that people normally don't go to as tourists. Matter of fact, there's a lot of tourists don't even know this place exists. And I'd like to kind of keep it that way. And, you find those hidden gems and you really don't want to kind of share your, your secret sauce kind of stuff. But most of my clients know because they followed me on Facebook or whatnot. And so they knew where I was at and hanging out at. And it was good. And during this trip, a lot of things happened. I mean, I had some highlights of the trip, had some lowlights of the trip. I mean, it was a lot of stuff that was going on. And I was kind of telling myself, was like, dude, you sure picked a very interesting time to take this trip. But, my stuff was all planned out. I have things planned out months and months and months in advance. I don't like doing anything at the last minute. So we're on this trip. And next thing you know, war breaks out in Israel. I mean, it's just the market begins to crash. I get emails, I get calls and different things like that. And it's kind of like people were acting like the world was coming to an end. And quite frankly, that's how the media was portraying it. And one of the things that I've talked to other advisors about, and, I simply asked them, how do you guys handle these types of situations when they come about with your clients? And they said, well, we don't work with people who freak out when the stock market goes up and down. And I was like, wow. They said, we do not work with people who freak out when the stock market goes up and down. If that's you, you're not going to be qualified to work with us. And I thought that was very, very interesting because for a lot of people, the market is pretty much their only option to having a successful retirement, other than starting to live a substandard lifestyle in retirement, meaning sell everything you got, move to Alabama and, get you 1,000 square foot flat or something and live on $300-400 a month. I mean, that is the alternative that a lot of people don't realize, that if you do not stick with the ups and downs in the market, that is your only alternative. So I would anyway, are you ready for this October market minute? 1, 2, 3, let's get it. All right. So we're going to do a little bit of a recap. Okay. And I think this stuff is important and it bears repeating because a lot of people forget. Right? A lot of people forget. I want to talk about the fear and greed index. Well, we're on, I think it's CNBC or whatnot, or CNN. You can go check out the fear and greed index. And what it is, it's a measure of volatility in the market. It's a measure of how much fear there actually is in the market or how much greed there actually is in the market. And when there's extreme fear in the market, that's the time to buy. When there's extreme greed in the market, that's the time to lighten up on positions because it never stays one way or the other too long. Why? Because of the psychological warfare that goes on in the market. I'm going to talk about that in a second. But people got extremely fearful in October and they started selling everything. The problem is the market was already short. I mean, people had already shorted the market. The professionals had shorted the market. We're talking, I don't know, I forgot how many trillions it was short or hundreds of billions short, but it was short. They had took a very negative position on the market. And that caused everybody else just to follow suit and start selling off because they just didn't know what was going to happen. Everybody was scared. A lot of positions got oversold. A lot of people panicked. A lot of people took losses that they didn't need to take. And, some people would ask me at that time, they would say, well, what should we do? And I said, well, you should sell your last goat and give me the money to buy right now. I mean, quite frankly, that's my attitude when the market goes extreme fearful like that. Because as I heard it said before, scared money don't make money. And basically what that means is if you're scared sitting on the sidelines, sitting in cash, when the opportunities comes around, you're not going to make anything because you're still sitting waiting to get in like double dutch, right? You're waiting on the rope to come around and around and around. Pretty soon, sun's going to be down and you can't see. And you try to get in at the wrong time, you're going to trip, hurt yourself, or you're waiting too late and if you're going to mess up, you're going to mess up anyway. Whether you get in too early, you get in too late, if you're prone to messing up your trades, they're going to be messed up. And I'm not going to get into the psychology of that part, but it is what it is. People get in at the wrong time. They get out at the wrong time because they don't understand these things and they listen to the wrong thing. I don't know why people constantly have just an innate ability to just go seek out bad information and constantly follow it all the time. I don't know if it's because of, I've heard it said that it's called confirmation bias, right? People are going along with the thing that they agree with the most, right? If they agree with the bad information and it sounds right and it resonates with them, they act on it, which is extremely crazy. And that's why we get so much fear in the market at the wrong time. And I capitalized on that. I capitalized on that big time. I kid you not. I took hundreds of thousands of dollars out of certain positions and I sold them out. And I bought certain options with that money. And when I did, it looked bad at the time. But guess what? They exploded. And now I'm able to do some other things with the money in a relatively short period of time. What else happened in October? We had bond yields. We had bond yields spiking and going through the roof. Why? Because our government can't stop spending money that they don't have. They keep printing money. And as I stated before, borrowers want higher yields in order to carry that debt. So the market was spooked. They thought we needed trillions of dollars in order to fund, certain government responsibilities throughout next year. Well, the numbers came in a little bit lighter. And the next thing you know, inflation numbers came in lighter. Things started coming in lighter and lighter and lighter. Now data is coming in lighter. We had retail earnings come in lighter. Everything is coming in lighter. There's a lag effect to this Fed hiking cycle that people aren't really, you can't hike that much in interest rates and expect nothing to happen. Of course, it's been slow, but it's going to be slow. And then all of a sudden, things are going to turn down so fast. Inflation is going to turn down so fast. A lot of people thought it was going to be sticky. It's going to stay around. The Fed's going to come out and say this. The Fed's going to come out and say that. Well, they might, but still though, rates will be cut sometime next year. We don't know exactly when, but rates going to be cut sometime next year. And certain positions are going to explode and go through the roof. And if you're not in them at the right time, you're going to lose out. Things will change and they will get better. And if we can get a government in place that isn't hell-bent on spending and giving their buddies money, we'll be in a much better place. And that's why I think they don't want outsiders. They don't want outsiders. They want insiders who know how to play the game with them and make them money. That's how things have been working for years and years and years, right? Now, I do believe that there's a proper place for government to administer certain things for the people. I do believe in paying my taxes. I do believe that taxes should be spent on the proper necessary things, not pet projects and making other people's buddies rich, right? Now, we know that. That's the game. Now, how do you take advantage of that game in your trading portfolio? And that's what I do for my clients on a professional level. But if we can get them to stop borrowing money, if we can get yields to keep going back down, things will look a lot better. Now, what about the psychological warfare that was waged on people's minds with the media? You have to understand the media is in the business of getting clicks and getting ratings, and they will show anything on TV that will get ratings. They will put out any story that they think will make ratings and increase ad spend. That's their goal. Okay. I know I keep telling people all the time, you can't keep paying attention to the news. You can watch it, be informed, but not alarmed. Okay. You can be informed, but not alarmed. Don't get up in arms over stuff. Don't get emotional about stuff. And that's the problem, right? Their goal is to get you psychologically exhausted. If you can't beat them, guess what? They're gonna wear you down until you give up. Okay. And that's why you need a professional if you can't manage your emotions throughout this process. But however, if you continue to drive your professional crazy, they're probably going to fire you. So I'm going to tell you now, make sure that when you talk to your professional, you're not emotional about it and you don't give them a hard time, because it is their job to look out for what's in your best interest, even though you can't see it. A lot of people have myopic views. They don't have the whole entire picture. They can't see everything that's going on. right? We don't have a crystal ball, but we have technology, we have strategies, we have data that you don't have access to. Okay. And when we see what's out there in the media, we know how to parse things out and put things together and put it in the proper perspective to hopefully make the right trades. But people oversold stocks, they oversold positions left and right. And, this morning I was going through some fundamental analysis and looking at some financials of a particular company that not going to say the name of, but they've been beat the hell up lately, all for the wrong reasons. And I was telling a client this morning, I was texting back and forth, and I said, I love the position. When I look at the numbers, this is insane. They have revenues that no one's even talking about. And it's becoming a huge part of their gap earnings, their net income. Insane amounts of money. They went from being negative $300 million to bringing in $2 billion last quarter in interest revenue, in financing revenue, right? They started lending money. They're making billions of dollars off of lending money. They sell a product, okay? They make money off the product. And then when people can't, finance the product themselves, they finance the product for the client. And the rates are at between, I think it was 5% and 16%, depending on what you buy and depending on your credit. It's all hidden in their earnings reports, and it's all hidden data that analysts know. And I'm sitting here looking at this stuff, and I said, you got to be kidding me. They're selling the hell out of this company over bullcrap on social media. It is insane. And it's a lot of different companies that go through that, right? Hit pieces get put out. And I was telling my client this morning, I said, I love the position, but they have too many secret enemies. And I'm not going to get into what I mean by that. They have too many secret enemies. They have too many people, powerful people in powerful places trying to tear the company down. So with that being said, I said, no, let's just get this thing back on track. And then let's just diversify a little bit here and there and see how it goes. Now, let's talk about the short sellers. Now, short selling means basically selling stock that you don't own and then buying it back when the price goes down. So you're taking a negative position in your portfolio. You're taking a short position versus a long position, and you can look that up. Now, the market was shorted billions and billions and billions of dollars from, say, I think it was July all the way up until just recently. Now, because treasury yields were going up, that wasn't a good sign. And so, that was a big sign of a recession. And we haven't had a recession yet. They're talking about one for next year in 2024, but I'm not sure. I mean, I think we've been in a rolling recession in certain segments for months and months and months and months. And I think it's just going to continue like that until the weak hands get washed out. Now, in the meantime, what else happened? Well, NVIDIA got hit with some bad news, and it was great stock. They did well last quarter, but they got sold off. They got sold off hard. And I don't know if that was maybe some inside information that was leaked from someone ahead of time. Who knows? But the position shouldn't have got sold off that hard on that great of an earnings beat. I haven't seen that in a long time, and it was insane. And once they started selling the technicals and it broke down and more people sold and sold and sold and sold, and people asked me, well, what's going to happen to NVIDIA? I said, nothing. It's going to go back up. And next thing you know, the Biden administration came out and said, yeah, we're going to halt chip sales to China. And, I started telling people, so you know what, look, I think this is a head fake, because here's what I think is going to happen. I think they're going to work out some kind of deal. They're going to find some kind of way to get some chips to China, and this is going to blow away. And so in the meantime, what we need to do is add more to the position. And so that's exactly what we did. We went in and started adding more to the position. And I think since we did that, I think we're up like 20% in just a week and a half or something like that, just by making that trade. Why? Because the news changed. Now NVIDIA can sell some chips. And I think, they're going to be able to find some way to sell the best chips down the road. We don't know, but we're going to ride that trade until the wheels fall off. So what's going to happen in 2024? Well, I suspect rates are going to be cut. I don't know exactly when, because I'm not an economist and I'm not working for the Fed. But I know that they can't sustain these high rates for any longer. I don't think so. And they're talking about raising rates, and that's another thing. Okay, I wanted to talk about the Fed effect, and basically what the Fed effect is when they come out and they start saying stuff, right? You got about 8, 9 of them or whatever, and they all come out and say stuff, and they come out and say stuff, and they come out and say stuff, and traders hang on to every word like it's, I don't know, like it's infamil, which is insane, because it's a process that the market is going to have to go through to figure out where it's going to go. And sit there and hang on to every word the Fed says and make trades based on what the Fed says is a pretty stupid thing unless you're day trading. Because they're going to come out and say one thing today, and then tomorrow somebody else will come out and say one thing, and one person can move the market 100, 200 points. They shouldn't be allowed to do that. That should not be a part of the process. Now, I don't think they're intentionally trying to move the market, but it's it's a byproduct of that. Just like you're out there being reckless with a gun and it goes off and you shoot somebody. You can't sit there and say, well, I didn't mean to shoot him. Well, that's an indirect consequence of your choice. And I think the Fed should be held to the same situation. They shouldn't be able to come out and say stuff because they know it's going to move the market, regardless of what they say. So there should be a period of time where they don't say anything because really there's nothing for them to say. The data speaks for itself. We should let the data come out and then they report on the data and then they can probably say, hey, this is what we think the data is going to go. And then for the next, I don't know, however months, shut up until you have another meeting. But it just really begins to add fear to the market. It adds volatility to the market. And, and it just kind of makes me think that, I don't know, I don't want to get into what I think, but it does play into the hands of certain people. And I think that is just unfair for the average investor because you don't know what the positions are going to be. And if you're not savvy enough to start hedging in 30 different directions to balance everything out, it just doesn't make any sense. It's too much to try to keep on top of. So you should have your core strategy that you implement and stick to your core strategy, whether that's buying, hold, or active money trading. You have to have a strategy and then keep on adding to it. Keep on until you get to where you want to be, right? And that's how you avoid all the psychological warfare. Turn off the TV, be informed, but not alarmed. And as soon as you start to feel yourself getting alarmed about something they're saying, or you're starting to get emotional about a certain position, then, you got to turn that information off and just kind of walk away, go back, check your data, make sure it's heading in the right direction. Because I have a saying that I hang on to all the time. I'm going to be right. Maybe not now, but somehow. And that's what I hang on to. I'm going to be right. Maybe not now, but somehow and sometime in the future, I will be right. The data does not lie. The numbers don't lie. History does not lie. It may repeat itself, but the number and the data don't lie. And once you're able to put two and two together and get a game plan and an understanding where things are going to go, then you can make those trades. So I just wanted to give you a real quick update on what happened in October. Looking forward to hitting you folks up again in the next couple of weeks and enjoy the holiday season. Until next time, everybody, 1, 2, 3, let's get it.
This is thepodcastfactory.com.